Alright, let's try recording the video one more time. Unfortunately, my card 5090 hasn't even been sent in for repair or exchange, and with my current card, rendering in 4K quality takes a really long time. But anyway, I'll try to be as quick as possible. So take note, here we have the yellow trend line, which serves as a key support level. It's a global support. Right now it's passing through about 97,000, right? So it's drawn through here 1 point and 2 points. Here they are, right next to each other. So this trend line has confirmation. So theoretically, we could reach 97. And now you'll see that this isn't even the limit. Take note, the RSI is pointing down. That's the first reason why we might move down, right? This is the daily time frame. Here we had a full-fledged, well, not really full-fledged, but rather a questionable divergence actually. But still, now let's keep going. Look, here we have an important level, right? From which there was a deep pullback, then another rise, and then an even deeper pullback. That was down to 98,000. And this level, we tested it once, broke through it, went above it, and now we risk breaking it again. If we close the day below this level, we'll get three things at once. First, it's the breakout, so to speak, of the level itself, 111,696. Second, the engulfing of this green candle from yesterday, which, by the way, didn't actually close above the 100-day moving average. And finally, third, it's the breakdown of two moving averages to the downside. And this is already, let's see, 1, 2, the third breakout, right? Well, there was a false breakout here again, well, something like that. So this is the third attempt to break out. And if we close below 111,696 like this, then there's a high probability that we'll head either here to 108,000 or here to 105,681. And potentially that's already the 200-day and 300-day moving averages on the daily chart. Well, and 97 is right nearby too, right? But I think that if we close below, then with high probability we'll head to the area of $108,000. That's it, there's no need to go further here. The only thing is, I'd turn on the monthly candles for a second. I didn't do that in the previous take. Pay attention. A new high in August. A close with a red candle, testing the base of the August candle. Yes, its opening point, and quite a deep pullback. And it's not out of the question that September will be red as well. And if they engulf these 2 months, August and September, if they engulf July's green candle, then that'll be a real disaster. And that disaster will have a target. The first target is $104,500. The next is the middle of that candle, $99,000, and then the next is 94. That's it, we've looked at everything here. Now let's take a look at TradingView. So we won't be looking at the smaller time frames here. Let's take a look at the bigger ones on the monthly candles. On the monthly candles, we have this target. This yellow one, I mentioned it in the previous take that it exists, but actually it doesn't because it was worked out right away. But this pink one still remains, right? It's there. Except, sorry, these are stock market futures indices. This is Nasdaq. All right, since we're on Nasdaq, no, let's actually switch to Bitcoin for now, and then we'll come back to Nasdaq. So look, on Bitcoin, our target hasn't been reached yet because I said it was there, but when I look, it's already been worked out. No, that target hasn't been reached. It's in the area of $75,000, 75, 76. Our PP dynamics are trending downward. A break. If the month closes like this, even with a green candle, that's bad news. Weekly candles. PP dynamics are breaking downward again, and that's to the downside. And we have targets here at 99,000, 91,000. Well, and probably something lower will show up too. Daily candles. Look, PP is down, PP is down, PP is down on the 4-hour chart. All the strong targets, the turquoise and orange ones, have been reached. Well, except maybe on the 15-minute chart, there's some target, maybe we'll hit it now. Around 112,000. I emphasize this is a mathematical target. Right here, look, on the hourly chart, there were a bunch of targets, and they've all been reached. Let's take a look there. Maybe we missed something. Well, we missed the green one, but as for the turquoise ones, we didn't miss a single one. All of them have been reached. Accordingly, almost everything here points to a decline. But let's wait and see how the day closes, how the week closes, right? Right. And how the month closes as well. There's not much time left until the end of the month. Now let's finally switch to the Nasdaq, which we had opened. Look, what about the Nasdaq? Look, so far there's no reversal here, right? But it's already overbought, and this is on a monthly scale, yes. The Y indicator signals that the market is extremely overheated. Look, on the weekly candles, there's a very strong overheating. But here a reversal has already appeared, which means that, in this kind of situation, you absolutely must not go long. Here, it's either short or stay out. So On the daily candles, everything is just pointing down, right? There are 3 red candles here. Well, we won't go into detail right now. Look, down here, down here. Well, only the hourly chart is, let's say, in an oversold state. But the hourly chart isn't really significant. So, the monthly is overbought, the weekly is overbought, and the weekly has already given a signal for a decline. That's it. And these are very big risks. The monthly hasn't given such a signal yet. The monthly is still, look, green, and everything seems fine on the monthly. But big things start small, and accordingly, a reversal on the monthly candles will begin with a reversal on the weekly ones. And on the weekly chart, it's already starting to form. That's why there are very high risks of a decline in Bitcoin. And as we've already noticed, these risks extend from the level of, say, $100,000 or 105, let's say, all the way down to, as you can see, there's even a level at 32,000. And if we look at the retracement levels, just look at how many retracement levels there are on the 4-hour chart, from 106,000 down to 86,000. If we look at the weekly candles, there are even levels at 45,800, 32,200, and 29,200. On the daily candles, the retracement levels are 100, 2,900, 9,500, 71,800, and 64,500. So in other words, there are plenty of levels to retrace to. And these levels tend to work out with very high probability over time. By the way, on the hourly chart, the nearest level at 111,500 has already played out. But there are also levels at 108,233, 101,097, and 95. Anyway, you can see it all for yourselves. With that, I suggest we wrap up the video. That's it. Please be very careful. I'll do a review of the big monitors either this evening or tomorrow. Hugs and kisses to everyone.